Welcome to Trading Lounge and the European Indices Report. However, I want to start with the S&P 500 for two reasons. First of all, it's the more shapely Elliott count and one of the strongest markets in the world at the moment. And secondly, the US have got an equities and soft commodities holiday on the Monday, so I won't be doing the video for the S&P 500 and so on. So I'll just put it in with the DAX, and we'll look at the S&P 500. We'll look at the Netherlands index as well, the AEX, because it's quite shapely as well. Good form for the Elliott count, and of course we'll look at the DAX. So in all cases, across all, most indices anyway, especially in the European and US section, that we have wave 3 up here, wave 4 here. We're looking for wave 1 here, an A and a B and a C here for wave 2, and now we're looking for a move up through here. Now, when we're looking at the S&P 500, it looks quite powerful and it looks like it can do that. But when we look at the European markets, we can see that obviously for certain reasons that they look a little bit weak and struggling to get up and off and so on. But I believe that if this count is correct and the market does push up, then the DAX and the FTSE and so on will follow to the upside. They'll play catch up. But at the same token as well, you know, if the European markets can't get up and then they roll over and fold over and move further to the downside, we will be on that side. We will trade what we see, and we will today look at some rough sort of entry points at a point that that could get bearish, and we'll even look at a bearish count on the FTSE as well, because I think it's important. That's what we do on the video section, isn't it? We look at all the reasonable possibilities, and of course, if you've got any thoughts, send them in. So as it stands, and we're using the S&P here as the template for global market direction, then there's not really a problem with this particular count. It's quite firm, and it's sitting on a nice support of this major trading level 2 here, something that we'd been waiting for a long time since this had started down here, and it's tested it nicely, and it's moved up quite strongly as well. It's moved up past the 61.8% mark of the current previous move down. So it is a sign of strength, and it is on its right track. We would expect it to have a correction at the 2100 here, in terms of this little pullback that I've got marked here in 3 waves, because the first 5-wave sequence up here is finished or just about finished. So I think we could just about cut through to the 2-hour chart to pick up that particular low here. So this is pretty much what we're looking at. So in terms of taking profits on this trend up here, then obviously we've pointed out the 2100, and that would line up with this particular high here would line up with highs in Europe as well. But what we've been looking for is 5 waves up through here, and then we'll look for a very simple A, B, and C here. It will be a 5-3-5 structure that pulls back. Well, we'll tag out the 50-60% area here, but in this case here, because it's stronger, it might just get supported within group 2, which is 65, 72, and 80 here. So on the 15-minute chart here also, just sort of squashing this up a little bit if I can, we've counted it up like this here in terms of 1 and 2 and 3 and 4, and then we were looking for 1 and 2 and 3 and 4 and 5 here, and then there's 5 in the last little section here. It does appear that it wants to go higher here, and that may be the case. Now, if it goes higher, when we're working with these levels, is that we're working with 2100 here, but we need to take on board any fluctuation within the range, and we would use group 1 here, which would be 10, 20, and 30, because if support was found on top of 30 here, for whatever reasons, then we would need to be long from that point. It's fine for the market to trade above it, like this here, but to actually find tested support on top of the number 3 here, because that would separate the order flow from the 2100 and send it higher at that point. So it's at that point that we would be wrong and we would need to be long, okay? But we would expect that, generally speaking, group 1 and then group 2 below here, the 65, 72 and 80 is the swing range for a correction to occur at the 2100 here. So that's what we're expecting, that's what we're looking for. So be very careful if you've got any other ideas about it, continuing to a particular up-down direction. So we would expect in this area here a correction like this before we move up, and it may not pan out like that. It may even be different. It may just pan out here in a retest of the 2100 and then poke down here a little bit and then move up from that point. But we are expecting a correction within this general range here, and that's the important thing too. And once we can confirm that we actually have a move down that's an A wave and a B wave and a C wave, and that can be confirmed, then we'll be looking at the long side. We also need to be mindful, especially in the European market, that for any bearish count. So that would pretty much be in a nutshell of this move up here in the European markets. When it moves back down, rather, if the 61.8%, the lower end of the box here, becomes a retested resistance, well, then we know that we would have to be looking at the short side at that point there. So that's what we'll go in and have a bit of a look at for these markets. But I should start with the FTSE, really, shouldn't I? So I will. So first of all, this is the bearish count for the FTSE. Okay, and it's quite valid as well. So, in these moves down through here in most of the markets around the world, we've treated it as an A wave and a B wave and a C wave, and that's panning out quite nicely for the US. But for the Australian market and the UK market here, it's quite clear too that it certainly can be counted down as 1 and 2 and 3 and 4 and 5 here. Not a problem. Then it would pull back to the 61.8% mark. Well, that would be pretty close to what we call our medium level here, 6,500. It's always a stronger price point, or it's normally a balance point. I have to be careful what I say. 7,000 is important, 6,000 is important, but we normally find the 65 number becomes the balance line for any correction in this zone here, and that's what we're looking at here, and rightfully so. This can be counted down as wave 1 here, an A and a B and a C here for wave 2. So it could be a bearish move here. So what we're going to do is that in the current case, we're working this move up here as an impulse wave, as wave 1, like the US markets. But if we look at this in terms of a retracement level to these levels here, I've got that upside down, but that doesn't matter. We can just still work with that easy enough. So if we take the 50% here and the 38.2, which would be the 61.8%, I'll just remove that now. So, if somewhere along the line, this level here, well, we could say the 6,000. If the 6,000 becomes the retested resistance, then we will be in bearish mode from that point, okay? But until that happens, then we're going to stay with the bullish side. So for the bullish side, we're actually looking at this as, excuse me here, let's get these tools working, up for wave 1 here, basically an A and a B and a C wave here, and then up for 1 here, like the US markets, an A and a B and a C, coming back to the 61.8% mark and then moving up. So this becomes quite a critical area in the whole thing. I mean, I want to be open-minded. I don't want to miss a particular trend, and I want to trade what we see. We are traders more than analysts, so we're here to make the money. So we have to be open-minded about it. So it's going to be a bit of not a tricky thing, but it's just a bit of a time-patient thing that we work out what this ABC pattern here is. I don't know if I've got this on the 4-hour chart or what this will do though, but yeah. So in this case, it's a little bit sort of having this wave 1 here and an A wave here, an A and a B and a C for the B wave here, and a C wave here for wave 2. I mean, technically that's all sort of correct here, but if I had my own way, I would sort of remove that spike, and I would put wave, this goes against all the rules and everything, but I would certainly put this in here and actually just forget about the spike here and have this here as wave 1 here and back for wave 2, and that's basically what we're going to do here. So yeah, we'll take that on board there, but basically we're looking for 5 little waves up here, so we're looking for a pullback, but we'll treat it as wave 2. But we'll pick this up on the DAX. So before I go to the DAX, I want to go to the AEX, because it was a count that where are we? AEX, Netherlands, here we go. So in this particular instance here, we can see that this is more of a ABC correction that we've got labelled here as an A wave and a B wave and a C wave. And the good thing about this, though, is that the B wave here basically overlaps into the wave 1 territory here, whichever way you want to look at wave 1 over here. So it's got more of a corrective count here, so it was a little bit easier to call on this. Of course, the spike here didn't make it easier as well, but at the same time, we'll stay with the S&P 500 count of wave 1 up here, an A and a B and a C here. Now on the stock 50 on the futures market and so on here, you'll see that this spike here was lower than this one here. But on the cash market, the stock 50 was lower here and higher here. So we'll go off the cash market for that and keep this in sort of tack here. But basically, this is what we're looking at here as well, in terms of wave 2 low being in place now. And, you know, the other point too here is that we're on top of support here. We just need to see the right price action. We know that, you know, the DAX is struggling somewhat to move up here compared to the FTSE and so on. Obviously, you know, loss of income and so on to a point. Yeah, so in this instance here from the daily chart, I'll just cut into the 2-hour chart, I think. Okay, so one of the first important points here is that from this high point to this low point here, the 50-60% retracement level is here. So what this market has actually done, it's moved above its 50% level, 61.8. So it's throwing its weight to the upside here now. We've also got support on number 3 here, which is all of group 1, 2, and 3. So it's got a nice tested support on this level here. I can see that this is corrective here, so I can see that this is actually going to be moving higher from here before we touch base here. So we can look at this here, if I can just do this quickly, as a wave 1 over here. It's not finished, so wave 2 will come back here. This will be wave 1 to here, wave 2 to here, 1, 2, 3, 4, 5, 3 here. So we can still look at this one being, you know, a bit more positive here on this side here. So we've got one more little high to come in play here. I'm just going to save that. So the weight of this particular market that we've used as an Elliott template for the European markets is certainly pointing to the upside. But once again, when we you know, take this, we're in taking profit mode at this stage, but we'll be looking for a corrective pattern to come into play here very shortly. So let's have a look at the DAX. Okay, sorry for being a bit long-winded about all of this, but just want to go over a few things, that's all. So with the DAX here, once again, too, we've got intermediate wave 4 here, wave 1 here, an A and a B and a C here for wave 2. And in this case, we know that it's, you know, it hasn't moved up to its 61.8% mark yet. You know, the S&P's moved through it, the AEX has moved through it. Obviously, you know, there's a bit of weight here on this market. And like I said before, that the DAX can lag the S&P 500 by quite a bit, actually. But what tends to happen later on, it tends to catch up. So that's something that we'll keep an eye on for sure. Okay, in this case here, we're looking at the first impulse wave to the upside here, and we would expect it to come, you know, from the previous high to the previous low here, even in a corrective rally as an ABC, we'd expect it to come back to the 50-60% mark. And as an impulse wave moving up here as well, we'd also expect it to come to the 50-60% mark. The trick is, though, is that when a market moves to its 50 or 60% mark here, is it in 3 waves or is it in 5 waves? That's the thing that we always need to work through. And currently we're looking at this as an impulse wave to the upside. So I think that I'm just going to cut through to the 15-minute chart, if that's okay, and pick up this particular low here. In this case here, from this low here, we're looking at this as wave 1 here, wave 2 here. Now, I had this labelled as wave 3 here, but I don't like it because wave 4 overlaps wave 1 here. And I know that's okay in derivatives and on an intraday basis to a certain point under the hourly chart, but I still don't like it. So it's quite probable that I've got this little count wrong here. So we were looking for 5 waves up. 9,800 is a profit-taking number. We have seen the bids being hit here, the sellers moving in. We'd expect that at number 8. But I think there's a possible further upside to this, and we can look at that. But the main point at this stage here is that we will continue to stay bullish with this market, bit of a Freudian slip, but we'll stay bullish with this market as long as this 61.8% mark, and this can change because this is taken from the top here, as long as this stays in as the support zone here, then we must remain bullish in this market. And this will be also tied into the 500 here, number 5, second strongest number in the market. So it's a great support. It just needs to be tested. The halfway between 5 and 8 is the 650 here. So that's also going to be important in the process as this unfolds. So if this market has got further upside within this, then we would need to change this. So where this wave 5 is here, then this would be the top of wave 3 here, and we would be looking at another move a little bit higher in here. So something like the 1 and the 2 and the 3 and the 4 and the 5 here, and then the A, the B and the C correction. I'm not too sure, but what I wanted to say here is these long positions here, they need to be protected. So I would, because of the US holidays for July the 4th, then most markets are going to be quite soft, aren't they? So it could just drop from here. I'm not sure. You would only go long here if you had tested support on top of that particular number. So we have the arrival, the reaction, the first high above the level. There'll be some sort of little corrective move and then sitting back on there like this, So it's a process for it to navigate from resistance over to support. So you don't jump the first high, because that first high will come back and retest the number. So look for something like this here, and if that's the case, then you can trade up to the 10,000. But yeah, I'm not kind of interested in that very short term here. I'm more interested in this wave 2 across all global markets, and that will put us in not only the indice buying mode, but it'll also affect currencies as well. But it will give us our setup for our long equity trades in the UK, in the US, and also in Asia as well. All right, thanks for tuning in, and sorry to make that so long-winded. Cheers.